Hi, I'm Steve Dudash, IHT Wealth Management. Welcome to this week's Wealthcast. Okay, so this one's one of the more serious ones. It's been a while since we have to do a serious one, but here's the deal, guys. Markets have gotten their butts kicked really bad in the last couple weeks, but last couple months. We're starting to field a lot of phone calls and a lot of the same questions coming up, so I thought we should talk about it a little bit here. Yeah, the markets are bad. You know what? It's okay. It happens. But here's why. Here's a little bit of context besides just me saying it's okay. 2015, similar thing happened. I don't know if people remember so much, but right around September or so of 2015, markets got crushed. It had the worst third quarter in like 30 years. People were feeling the exact same way, getting the exact same questions as going on right now. And I wrote a letter and I sent it out to all of our clients, and I was in the Wall Street Journal saying this exact same thing. This is not 2008. It's okay. And we all get scarred from our past experiences on stuff, so it's natural to immediately relate back to that. But there was systemic problems then. There was a housing market that was collapsing. There was credit defaults everywhere. So companies were literally going out of business overnight. If you look at the bond side of the world right now, and I was talking to a good friend who does this for a living, the spreads aren't there. And what that means is the perceived risk with corporate bonds, with things that are higher risk than just normal US government bonds, when you start seeing a divergence there, when you start seeing that separate from what normal bonds look like from a risk standpoint, that's when you need to be worried. That's when fundamentally something's changing. That's not going on right now. And maybe that's a little too technical for people, but that's not what's going on right now. Our economy is good. If you actually look at the valuations of the S&P 500 right now, it's at like 14 times. Historically, it's like at 16, 17, whatever. It was as high as 20s a few different times. We are actually undervalued for the first time in forever. And that's hard to say considering that the market's been up for 10 straight years. Where all of this is going is don't be the person who makes that mistake, the fundamental mistake that the average investor always makes, and that is when things get bad, they get uncomfortable because it's their money, which I understand, and they see real dollars disappear. And then they sell out, and they're like, I just need to sit on the sidelines and I need to wait. And what that really means is I'm going to wait until things feel better, which means the market's already rebound, things have already jumped back up. At that point, you've missed it. You've missed the normal rebound. A few weeks ago, maybe a month or two ago, I was talking about in a normal year in the last decade, at some point in the year, the market's 12% off its high. That's your typical swings that you see in a normal year. Right now, we're at like 14, 15, depending on the area, 17%. We're not that far off of normal. And I know it's at the end of the year, and I know that means that the press is going to hammer it more. I promise, because they called me and want to talk about it. And it's going to get blown up because of that. And the story's going to get bigger. I want you to all just remember, there's one 100% possible answer that always happens, 100% of the time in the history of the markets, and that is it always rebounds. There's never, ever been a time, ever, that the markets have crashed or pulled back a little or had a reset or whatever fancy word you want to use for it and has not rebounded. If you would have listened to my advice in September of 2015 when people are feeling this way and you would have closed your eyes and wrote it out, you'd actually be up over 20% right now. My guess is 2-3 years from now, I'm doing a video like this saying the exact same thing. This is just another one of those moments where emotions have gotten ahead of the math, frankly, and don't let that be you. Don't let that be your cause. Don't let that be your mistake. It's okay to be uncomfortable. It is. And it's okay to make changes. It's fine. But don't be the one who makes the fire sale changes. That's just, it's the best advice I can ever give you. So I hope you guys have a nice holiday weekend. And if you have any questions, or if you want to talk about this, call, email, text anytime, Twitter anytime. And we'll talk next week. It's going to be okay, I promise. Take care.